Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 25th, 2026, and we're diving into TKO's fourth quarter and full year 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, TKO has been making waves in the sports and entertainment industry. Can you give us a brief overview of the company and its recent performance?
Absolutely. TKO Group Holdings is a major player in the sports and entertainment sector, with properties like UFC, WWE, and PBR under its umbrella. The company has shown significant growth, particularly in media rights and live events, and has recently completed some strategic acquisitions. Their latest earnings report highlights a strong performance in 2025, with notable increases in revenue and net income.
Revenue and profitability overview. Let's start with the top line. TKO reported a net revenue of $1.38 billion for the fourth quarter of 2025, marking a 12% increase from the previous year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by strong performances from UFC and WWE. UFC's revenue increased by $57.5 million, while WWE saw a $61.3 million rise. These gains were slightly offset by a decrease in the IMG segment. The company's strategic focus on media rights and live events has paid off, contributing significantly to their top-line growth.
And what about profitability?
TKO's net income for the quarter was $0.8 million, a substantial improvement from a net loss of $60.9 million in the prior year. Adjusted EBITDA also saw a 30% increase to $281.2 million, reflecting the company's operational efficiencies and cost management strategies.
Segment performance and strategic initiatives. John, can you break down the performance of TKO's key segments?
Of course. UFC generated $401.4 million in revenue, driven by increased partnerships and media rights. WWE brought in $359.6 million, benefiting from new distribution agreements with Netflix and ESPN. However, IMG's revenue decreased to $247.7 million, mainly due to the absence of the Arabian Gulf Cup. On a strategic front, the launch of Zuffa Boxing is a significant move, positioning TKO for further growth in the boxing arena.
How do these segments contribute to TKO's overall strategy?
Each segment plays a crucial role in TKO's strategy to leverage premium content and expand its global reach. The focus on media rights and live events not only boosts revenue, but also enhances brand visibility and fan engagement across different markets.
Financial health and capital allocation. Let's talk about TKO's financial health. How is the company managing its cash flow and capital allocation?
TKO generated $309.9 million in cash flow from operations in Q4, a significant increase from the previous year. Free cash flow also rose to $249.4 million. The company holds $831.1 million in cash and equivalents, providing a solid liquidity position. Importantly, TKO plans to launch a $1 billion share repurchase program in March 2026, demonstrating confidence in its financial stability and commitment to returning value to shareholders.
What does this mean for investors?
The share repurchase plan is a positive signal, indicating that TKO believes its stock is undervalued. It also reflects the company's robust cash generation capabilities, which support both growth initiatives and shareholder returns.
Guidance and future outlook. Looking ahead, what guidance has TKO provided for 2026?
TKO is targeting revenue between $5.675 billion and $5.7775 billion, with adjusted EBITDA expected to range from $2.24 billion to $2.290 billion. This guidance reflects the company's confidence in its growth trajectory, driven by long-term media rights agreements and global expansion efforts.
What did the leadership have to say about these prospects?
CEO Ariel Emanuel emphasized the company's strong positioning with robust media rights agreements and operational strength. He highlighted TKO's commitment to delivering sustainable value for shareholders through strategic initiatives and capital return programs.
EPS forecast and market reaction. John, let's discuss the earnings per share. Analysts had forecasted an EPS of 14 cents. How did TKO perform in this regard?
TKO reported an EPS of 08 cents, which fell short of the forecasted $14. This miss was primarily due to higher operating expenses, including increased selling, general, and administrative costs. The market reaction has been mixed, with some volatility in the share price as investors digest the earnings miss against the backdrop of strong revenue growth and strategic initiatives.
How should investors interpret this EPS miss?
While the EPS miss is a concern, it's important to consider the broader context of TKO's performance. The company is investing in growth and expanding its global footprint, which can lead to short-term cost increases. However, the long-term growth prospects remain strong, supported by strategic initiatives and a solid financial position.
Key takeaways. In summary, TKO has delivered a strong performance in 2025, with significant revenue growth and strategic initiatives setting the stage for future success. Despite the EPS miss, the company's robust financial health and growth prospects make it an attractive investment. Thank you for joining us, John, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on TKO's performance in the comments below.
Thank you for having me. It's been a pleasure discussing TKO's impressive year and exciting future. Looking forward to seeing how the company continues to evolve in the coming months.